So where I stopped
Yes.
was these tools, and
Yeah.
I gave you guys assignment. I gave you
Yeah.
guys assignment to
Yes.
identify an uptrend, right?
Yes. Yes, please.
Okay. So what we are going to be doing today is totally on trading view. I
Okay.
want us to set the trading view for you to understand the trading view and the tools, how to use the tools, how to mark out
Okay.
your charts, your key zones.
Okay.
Yeah. So now we'll have I don't know, check whether some people are. So now what we're going to be doing, the time frames that we use, right? The time frames that we
Yes.
use for US30. If we want to analyze a trade, what do we do? Start with. We'll start with the monthly. We'll do top-down analysis. Hope I'm recording
Okay.
this. We'll start with the top-down analysis. So how do we go about with the top-down analysis? First of all, let me delete this. We'll start with the monthly. This is the monthly. This is the time frames that we have. All this thing you are seeing is the time frame. We have the 1 minute, you have the 3 minutes, 5 minutes, 15, 30, 45,
Okay.
1 hour, 4 hours, daily, weekly, monthly. Then you can start it here also. Do you get? You can start it
Yeah.
there so that you can easily check the time frames that you want to use, right?
Okay.
Yeah,
Okay.
so now as US30, first of all, if you want to analyze US30, you have to start from the monthly time frame. So we have to start from the monthly time frame. If you want to analyze, each time you want to analyze the US30, you have to start from the monthly time frame so that you will see the direction of the market. That's the structure of the market.
Okay.
Do you understand? So the structure of the
Yes.
market is for you to see the market structure. Once you identify the market structure, then you now map out your zones, your key zones, right? You map out your key zones.
Yes.
So now looking at this chart now, what is the trend of this chart, of this US30 currently? Can you tell me the trend of this chart, the US30?
Okay. Let me check.
Can you tell me the trend?
Uh, the trend is uptrending. Oh,
It's an uptrend.
yes, please.
Okay, how do you know that it's an uptrend?
Because
How do you know that it's an uptrend?
the market is moving up.
Thank you very much. The market is moving up. So once you see that the market is moving up, is an uptrend, right? Like
Yes.
this, once the
Yes, please.
market is going like this, like this, like this, you know
Yes.
that the market is an uptrend, right? So when the market
Yes, please.
is moving like this, you know that the market is what? A downtrend. A downtrend.
Downtrend. Yes.
Yes. So when the market is going like this, what are we doing? We are buying. When it's moving up,
Okay.
we are buying. Then when it's moving down,
Yes.
what are we doing? We are selling.
Yes.
Understood?
Yes,
So,
please.
okay. So now, how do we identify when to buy in the market or when to sell the market? Now, first of all, as a trader, what you need to do firstly is to identify the market structure, which we have already identified. We have already identified this
Yes.
market structure, right? We have already known that this
Yes,
market now
please.
is an uptrend. So now, what do
Yes.
we do? We have to mark out our key zones. What are the key zones
Okay.
that we have? The key zones that we have are where the market react 2 to 3 times. That's what is called a key zone. So how do we mark out the key zone? We use our rectangular. This is our rectangular. This is the highest point, the highest level that the market has gotten to, right?
Yes.
This is the highest level that the market has gotten to. So we'll mark it out. We'll mark it out. So once we mark it out, we are in the monthly. This is another zone that the market reacted to. This zone, the market reacted to it. So we'll still mark it out. This is the zone that the market reacted to. We'll mark it out.
Uh,
So now, this is the highest level that the market reacted to. And this is the
yes.
lowest level, the last level that the market reacted to. Right? So
Yes.
I'm still seeing another zone here that the market reacted to before it now went down and now went up. So now we have to mark out
Yes.
this zone. I mark out this zone now. This is where another place that the market reacted to. Remember, we are still on the monthly time frame, right?
Yes.
So now,
Yes, please.
after the monthly, we'll move over to the weekly time frame. Now, we are in the weekly time frame. Are you seeing from the weekly time frame, the market is still an uptrend, right?
Yes.
Okay, the
Yes,
market is still
please.
an uptrend. So now, do you see any other key zone at this weekly time frame? Do you see any other key zone here? Did you see any other key zone?
A key zone.
Yeah, do you see any other key zone like where the market has reacted like twice? Here the market reacted here, went up, market reacted here and here. And the place that we marked out, we drew our rectangular line, the market reacted that place
Uh,
double and the highest level. This is what we marked out,
okay.
right? Okay, so now
Yes.
there is no other place that the market reacted to on the weekly time frame.
Yes.
On the weekly time frame. So now we'll move over to our daily time frame. What we are doing now exactly is top down analysis. We are doing top down analysis, right, of US30. So now, can you see that the market is still an uptrend?
Yeah.
Okay, this market is still an uptrend. So now, are you seeing any other thing here, any other zone around here? There is no there is no zone.
Okay. So,
So now I am seeing a trend line. This is a trend line. This thing you are seeing is a trend line.
yes.
This is a trend line. See, We'll bring out our
Yeah.
trend line. I will draw it like this. We'll draw a trend line. This is the direction that the market is going. Can you see?
Okay.
Yeah, this
Yes,
is this
please.
is the
Let me see.
direction that the market is going. So now as a trader, what do we do? What do we do now? Since we have identified the key levels, we will now have to move to 4 hours. 4 hours is where we'll do the final analysis. You understand?
Okay.
Uh, 4 hours is where we'll do the final analysis. Then we'll now mark out our where we'll enter our entry level. Do you understand? So
Okay.
once we have already identified the trend of the market, we already know the market structure. So the next thing now is the position where we are going to be selling, buying the market, right?
Okay.
Yeah. So now this market is actually moving up. So what I'm seeing here is that okay, I will get to this Fibonacci tool. This Fibonacci tool will first of all mark our Fibonacci tool from the previous low. From the
Okay.
previous low. This Fibonacci tool is what is a tool that you use, a tool you will use to mark out where the trend, where the market arrived, where the market is going to. Do you understand? So
Yes, please.
the most important thing that we use in this Fibonacci tool, the most important percent that we use is the 50% and the 61. So once you see where the market reacted at the 50%, you have to mark it out. And once you see a reaction at the 61%, you mark it out. So our interest, most important thing is the 50 and the 61 fib level. Do you understand?
Yes.
Okay. So now we have to mark it out. Now this is the 51 fib level, 61 fib level. This is another 50 fib level. So it's very simple. And this is the next place that we are expecting this market to get to. This is the next target. This 27% is the next target, and this 61 is still the next target where we are expecting the market to get to, right?
Okay.
Yeah. So now let's take our Fibonacci tool out. So we take it out. So now what we are expecting from this market is that this market do this. Once it gets to, this is the resistant level. This is the highest resistant level. This line you are seeing. Do you get?
Yes.
This is the resistant level.
Yes, please.
So once the market gets here and push up, once the market gets here and push up and break this zone, this resistant level, the next thing we are expecting is the market to fall, to retrace a little bit. Once it retraces, then we take it up to this next level. Understood?
Yes.
So before we start, we take it next to this next level. This is another zone that I'm still seeing. These are the things that the market might likely do. You understand? Is the venture of probability. Is a venture of probability. Do you understand? So the market might
Yes.
likely still come here, pull like this, then go like this. Do you understand?
Yes.
Because of what? Why do I map out this like this? Because what we are expecting is a buy from the market. because the market is an uptrend, right? So anything we are expecting from the market is going to be a buy. We are not looking at sell. We are only looking at
Okay.
the buy. Because of what? We already identified the structure of the market and we have seen that it's an uptrend. Even if the market is selling, what do we need to do? We have to wait until the market start buying, then we can now buy. Do you understand?
Yes.
So do you have any question regarding to this so far? Do you have any question?
No, so far I don't have any question.
Okay, very good. So now, once you have done this, the next thing that you need to understand is US30. We trade US30 during the New York session, which is 4:30. You will check at your own end the time that tallies from New York section. Do you
Yes.
understand? Then you check the
Yes.
time zone, the time, because here in Cyprus is 4:30. You understand? So you will check on your own time zone to correspond, so that it will correspond to your own time zone. You get?
Yes. Yes.
Okay. So this is exactly what we'll do. And another thing is that the US30 moves 100 pips. Anytime the US30 moves 100 pips, there's always a reaction. There is always a reaction, but that will probably be for the next class, right? I will teach that also.
Yes.
So these tools, I want to go through these tools so that you understand the tools, how the tools work. Number one is the trend line.
Okay.
This is the trend line. When you see something like
Okay.
this, a zone like this, a direction like this, you bring this your trend line. This trend line, then you draw it like this. This is the way you draw it. The trend line, before you use a trend line, there should be a two or three touches.
Okay.
There should be a two or three touches before you can bring out your trend line. Before you can draw your trend line. Do you understand?
Yes.
Do,
Yes, please.
do you see something? Do you see that there is first touch here, second touch here,
Yes. Sec.
and the third touch here?
Third. Yes.
And you see that once it gets to this third touch, fourth touch, the market reacted.
Okay.
Did you see that the market reacted from here?
Yeah. Yes.
It couldn't push down. The market still went up. Do you
Yes.
understand? So whenever you're analyzing the market, make sure that you bring out a trend line that at least have two or three touches before you
Okay.
can confirm that yes, this is a trend line. If it doesn't have two or three touches, that means it is invalid.
Yeah.
If it doesn't have two or three touches, it is invalid, right? So now these tools, we have already talked about the trend line. The function is to mark out your position, the position. Then the second one is the path. The second one is the path. This path, the second one is the path. It's for you to just draw. Maybe if you're analyzing the market, like this thing that I drew, is for you to just use it and draw the direction of the market. You understand? For
Okay.
you to draw the direction of the market like this, like this, like this. For you to
Okay.
draw the direction of what you are expecting from the market. This is what the path is used for. For you to draw what you are expecting from the market. Do you understand?
Okay.
Then another tool that
Yes.
you need is the rectangular. The rectangular is used to draw the key zone. The key zone,
Okay.
which is this, the key zone.
Okay.
Yeah. So another tool that we use also is the fib retracement. This is the fib retracement tool. So this fib retracement tool, it has a measurement. You have to measure it. So how do you measure this retracement, this fib retracement? Like when you see the market, the last support, if it's an uptrend, before you use it, you have to first of all identify the structure of the market. Then the last
Okay.
support zone of the market is where you place your Fibonacci. This fib retracement. You have to place it like this. Once you place it, you now
Okay.
drag it. You drag it to the highest resistance level from the support
Okay.
from the support level to the resistance level. Then you keep it like that. You drop it. Once you drop it, you will now identify, you will now look at the 50% and the 61%, whether it correspond.
Okay.
So whenever it gets to the 50% level, there is always a reaction, and the market might likely push up from that level, from that 50% or 61%.
Okay.
Do you understand?
Yes, please.
Okay. So now this is the function of this fib retracement. The same thing goes to an up or a downtrend. When the market is going down, like let's say for instance, this market is pushing down. This market now is going down. You will still use this Fibonacci to identify the level of the market, where the market is going. You see,
Okay.
there is a reaction at the 61% level and the 50% level. The same way you use it on the uptrend, that's the same way you use it when the market is a downtrend. Do you
Okay.
understand?
Yes.
Okay, very good. So now this is a horizontal line. The horizontal line, we use the horizontal line to mark out. Let me delete this. We use this horizontal line to mark out the the level the level of the market, where the market reacts. Like I told you, US30 reacts every 100 pips. Once US30 does 100 pips, there is always a reaction.
Okay.
Once US30 does 100 pips, there is always a reaction. So we use this to identify the level. Like this is 400 for 48,400. This is 48,400. Now, if we want to mark out another horizontal line, what are we going to be looking at? 48,500. 48,500. 48,500. Because this thing now you are seeing now is already 100 pips. Is 100 pips. From here to here is 100 pips. Can you see?
Mm.
With this ruler that I use now is 100 pips. This ruler now is what I use to identify this, if it's 100 pips or 50 pips or 60 pips, right? So this is the function of this horizontal line. So the next tool that we use, the next important tool that we use is the long position. What's the long
Okay.
position? The long position is for you to mark out where you'll be entering the trade and identify your stop loss. The long position is for buy, where you'll be entering your trade and where you'll be closing your trade. For instance, this, are you seeing what I'm doing?
Yes.
So if you want to enter a trade here, for instance, you want to enter a trade here, you bring out this your long position. This is going
Mm.
to be your take profit. You see, are you seeing target here? Are you seeing what they wrote here? Target.
Yes,
Are you
target,
seeing the
yes.
reaction? Yes. So now you once you bring it out, you know the next level where you be existing the market. Where you be exiting the market. Then this stop loss is where you will put to protect your account. So that if the market
Okay.
doesn't go your direction, if the market doesn't go your direction, it will knock you out. Do you understand? So now
Yeah.
what we normally do is 1:2 reward, 1:2 reward ratio. Do you understand? So any trade that you see
Yeah.
that is not 1:2, you don't take it. any
Okay.
any trade that you see that is not 1:2, any trade that you see that is something like this, 1:1, we don't take it. It has to be 1:2, something like this, 1:2, for you to take that trade. Can you see
Okay.
that this is one is to
Okay.
two, right?
Yes.
So this is for uptrend. This is for uptrend. This two is for uptrend, which is the long position. Then we'll have the circle. The circle is for you the point where you enter that trade, where you have already marked out to enter the trade. If you point your trend line here and your zone here, do you get? Then this circle now is
Yeah.
for you to place it like this. What does it mean? You are saying that when this market come to this direction, this point, I'm going to be buying.
Yeah.
I'm going to be buying like this. We have 10 minutes, right? Once this market come to this place, I'm going to be buying. That's the function of this circle. Then this arrow is for you to mark out the point at which you are expecting the market to get to. You can also use it for your analysis, right? This arrow, you can use it to identify the point where the direction of the market is going to. If it's uptrend, you can use it to identify it. If it is downtrend, you can still use it to identify it. Understood?
Okay. Okay.
then
Yes, please.
then this is a short position. This is the opposite of this one. This is a short position. What is this one? This is for the resistance when you want to sell. Are you seeing? When you want
Yes.
to sell the market, this is a short position. Once the market get here, you can now sell it. But when it goes there, that means it is invalid. When it goes by this side, it is invalid. But when it goes to your direction, it is valid. That is why you need this long and short position to analyze and put it that, okay, this market is going this direction. Once it goes against me, it will hit me out. It's for you to use it and
Yes.
identify your chart. And it also makes your chart more look clean and smooth. Do you understand?
Yes,
So
please.
now we still have another tool, which is the horizontal layer. Horizontal layer is also used to identify a key zone like this. Is also used to identify the key zone. Understood? Is also used to
Yes.
identify the key zone. So that's the function of the horizontal brain. Once you mark out your key zone, you can still use it to identify your key zone and psychological level. Do you understand?
Yes.
Okay. So that is it for this tool. Now we have the ruler. All these tools on your leisure time, you still go through it. You still go through it. You get? Then this
Yes.
let me
Okay.
talk about this ruler. This ruler is for you to mark out the pips. If it's the pip level, is for you to check the pip level when you already analyze a trade and you are checking how you want to check how many pips you want to catch from the market. You can use it to map out the pips. If it's 600 pips, you know that you are catching 600 pips. If it's 500 pips, you know that you are catching 500 pips. It's a ruler,
Okay.
just like our normal ruler.
Okay.
It gives you the numbers of pips. Can you see what they wrote here? Minus. If it's going down, it is minus. Then if it is going up, it is plus.
Yes.
If it is going up, it is plus. Can you see?
Yes. Yes.
Okay. So that is it. So what I want you to do now is go and practice this. The tools.
Okay.
Use these tools to I want you to use the tool to identify the trend of the market. Use it to identify the trend of the market. Use it to identify the zone of the
Okay.
market, the key levels, like I explained to you initially, the key levels, and use your long position to tell me where the market is going to and where you are going to be putting your stop loss. So
Okay.
that is going to be your assignment. So next week Saturday, which is
Okay.
next week Saturday, we are going to be teaching on how to uh we'll summarize the trading view. Once we summarize it on Saturday, then we're going to start setting our MT5. I will now show you how we take trade from the MT5. Do you understand? How we take trade
Okay.
from the MT5. Then after that, we'll move to the next steps. All right.
Okay.
Okay, no problem. So thank you very much for joining and go and practice.
Thank
Then
you.
you you give me a feedback. Drop it once you do the assignment. You drop it on the group. You understand? And
Okay.
I'm already recording this video. I'm going to drop it also.
Okay.
All right.
Thank you very much.
All right, no problem. Take care.